The market, including myself, thought the Bank of Canada was going to move 75 basis points higher on Wednesday. They proved me wrong and they only raised by 50 basis points. Now, the biggest question right now is the Bank of Canada pivoting. Are they taking a step back to their forced approach of dealing with inflation? We're going to be covering a few different things that Tiff discussed in his press conference this week. Inflation as a whole, how is that reacting recently? We'll also be discussing just how big of an increase it was in comparison to the ones that we've seen in the past. And most importantly, we're going to get some insight as to what Tiff and the Bank of Canada sees for GDP numbers over the next couple of quarters. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. We drop a new video every single Sunday, so come back to the channel and come check it out, especially if you like content like this. We'll start off by talking about how inflation has reacted. Just on a high level basis, we have gone from 8.1% on the CPI all the way down to 6.9. So we are trending in the right direction and definitely leads us up to having that consideration of, did we get the job done? So let's hear what Tiff has to say about that.
Inflation in Canada is broad-based, reflecting large increases in both goods and services prices. About 2/3 of CPI components have risen by more than 5% over the last year. And rising prices for essentials like groceries and rent are hitting lower income Canadians particularly hard. Our preferred core measures have stopped rising in the last couple of months, but they have yet to show clear evidence that underlying inflation is coming down.
The first point that Tiff is making here is that although we are seeing a cool down in oil prices, the fact of the matter is that there are other sectors within the CPI numbers that are still increasing. And that has been the overall motive, the overall perspective of the Bank of Canada, is that they are going to get inflation under control. And until we start to see a bigger decrease in all of the sectors, then we're going to continue with the rate increase. Now, you're going to sit back and question, why didn't they go out with the 75 basis point? Well, that is definitely something that we'll learn with the next topic as to what Tiff thinks about the magnitude of the increase.
We decided today to raise the policy rate by 50 basis points. That is another larger than normal step. It's a big step.
So when we think about it, only at the beginning of the year, we were at 1/4 of a basis point, 0.25% on the interest rate. Today, we sit at 3.75. That's 3.5% of increases. I'm sure you could do the math, but this visual right here is going to provide a better indication of just how quickly we have moved on the overnight rate. And we can see from this chart here, it's been one of the quickest raises in history. I think only 1992 was one of the periods in which we moved higher, but they have moved quick and fast in swift motion. With that being said, although it wasn't what the market was anticipating at 0.75 or even a percent, 0.5 basis points is still a pretty big hike. So taking that into consideration, that's another point as to where the pivot still hasn't happened. And I did reference this in the beginning, and kind of the finale here is obviously what we see for GDP. The Fed is walking a tight line right now between a soft landing and a hard landing. Can we raise the interest rates without hurting the economy? Let's listen to what Tiff has to say about this.
We're expecting roughly zero growth for the next several quarters. And to be more specific, the last quarter of this year, the first half of next year. After that, we expect growth will pick up. So with growth close to zero for the next several quarters, it's just about as likely that we'll get some small negatives as we get some small positives. So we could see some contraction in GDP. We could see a very modest growth in GDP. What we don't expect is a severe contraction.
With the Bank of Canada still under the premise that the economy may be stagnant in the short run but improve in the long run, it gives no reason for them to pivot. That's why the 0.5 increase is justified in terms of what Tiff has mentioned, is that we may see some periods, several quarters worth of stagnant GDP, but after inflation flushes itself out of the system, then things should improve. We should start to see those positive GDP numbers. So by any means, in summary here, we still have areas of the CPI that are increasing, that are inflating. 0.5 basis points was still a relatively high increase, especially if you look at past hikes. And third and most important is Tiff still thinks a soft landing is on the table. And all in all, we're going to listen to what Tiff has to say about where we're at today and just how much longer we have to go.
This tightening phase will draw to a close. We are getting closer, but we're not there yet.
We are not there yet. We don't have a crystal ball. We don't know when it is going to end. It is going to end eventually. Years, months, days. I don't know what the answer is. But let me know what your thoughts are below. Were you thinking that we were going to have an oversized rate hike? Or were you happy with the 0.5 rate hike that came in this past Wednesday? If you're still here with me, I hope you're enjoying the video. Make sure to hit that like button. I hope you all have a great week in the markets. Happy trading.